Good evening and welcome to Bizworld. The government today launched a 3-year program to reform and future-proof government-linked investment companies, GLICs, to ensure the mammoth holding companies remain relevant over the longer term. Called PERKUKUH, Pelaburan Rakyat, or PERKUKUH, Prime Minister Tan Sri Muhyiddin Yassin said the program targets 6 GLICs, namely Permodalan Nasional Berhad, Khazanah Nasional Berhad, the Employees Provident Fund, Armed Forces Fund Board or LTAT, Lembaga Tabung Haji and Retirement Fund Inc. or KWAP.
The GLICs have been at the forefront to mobilize both human and financial resources over the years to help Malaysia transform from an agrarian-driven economy to an export-oriented manufacturing economy, then to a more balanced service and manufacturing economy, and now in the challenging process of reinventing into a more knowledge-driven economy. In the midst of the pandemic,
PERKUKUH comprises 20 key initiatives to achieve 5 key outcomes. Among them are sharpened clarity on the mandate of each GLIC and future-proof GLICs with best-in-class governance, capabilities and strategies. GLICs and their entities control approximately 1.7 trillion ringgit of assets under management, making up more than a quarter of the market capitalization of Bursa Malaysia. Research firms believe the price of crude palm oil, CPO, would stay higher for quite some time, given its tight supply situation until the third quarter of this year. Malaysia's July palm oil inventory decreased by 7.3% to 1.5 million tonnes, representing a 3-month low inventory level since March. MIDF research in a note said it foresees tight inventory level to continue to add upward pressure on CPO price movement. The firm also expects the CPO price will soften in the second half of 2021 in view of unresolved labour shortages due to border closure and slow production growth. Meanwhile, CGS-CIMB projects palm oil stock to rise 4.5% to 1.56 million tonnes by end of this month. It also predicted that the CPO prices would remain firm at 3,500 ringgit to 4,500 ringgit per tonne in August amid low global edible oil inventories. The Malaysia Automotive Robotics and IoT Institute, MARI, and the Malay Vehicle Importers and Traders Association of Malaysia, or PERKEMA, have inked an agreement to accelerate electric vehicle EV infrastructure development. Under the agreement, the parties would collaborate to set up 1,000 EV charging stations around the country by 2025. They will also co-develop connective applications that include e-payment, charger locators, battery management systems, and service center networks for the charging ecosystem. The development activities will be coordinated through an EV Centre of Excellence, or COE, that will be established through this partnership to integrate the charging ecosystem, and this will cater to the demands of future e-mobility users. Post Malaysia will end its contract with 262 Post Rider agents in the Klang Valley next month due to dwindling snail mail volumes. It said the termination of the contract falls under Phase 2 of its rationalisation exercise of the Post Rider Outsource Programme. The Post Rider Agent Programme was created in 2019 and has helped the company deliver more parcels within the country. However, snail mail volumes have continued to fall significantly, while more e-commerce players offer in-house delivery services. Thus, the subsequent review of its operations led to the decision to discontinue the Post Rider scheme in stages. And that's all for Bizworld today. I'm Raymond. Thanks for investing your time with us.